Corporate Finance Excel Practice Problem. In this presentation, we're going to work a practice problem in Excel related to using the price-earnings ratio, otherwise known as the PE ratio, to calculate market price. Get ready, it's time to take your chance with corporate finance. Here we are in Excel. We have the information on the left. We're going to put that into the blue area into our worksheet on the right. We will be using the PE ratio and the earnings per share in order to calculate the market price. So in order to do that, we're first going to figure out basically a portion of the income statement to get to the net income, on which we can calculate then the earnings per share. Then we can use the PE ratio in order to figure the market price. Information on the left includes debt-related information, the rate 9%, and the amount of debt outstanding 200,000. Common stock information, par value 10, amount is going to be the 310,000, and the shares then the 36,000. The price to earnings ratio or PE ratio 17, and then the earnings before interest and taxes 70,000, tax rate 15. Now notice what the PE ratio is. This is going to be kind of the thing we're focusing in on here. Price over earnings. When we're thinking about earnings, we're thinking about earnings per share, earnings on a per share basis. So we're thinking about how much the price is, the market price, how much stocks are selling for in relation to the earnings per share calculation. So let's see what we have here. We're going to be doing part of the income statement. We're going to start with the earnings before interest and taxes because that's what's given to us. This is basically net income before we deal with interest and taxes or possibly operating income. That's going to be starting at the 70,000. Then we'll deal with the interest. So we'll say interest. And we'll calculate the interest. That's going to be the 200,000 times the 9%. So I'm going to say equals then. And that 200,000 then times. And then picking up that 9%. That's going to give us our 18,000. Let's put an underline here by going to the Home tab, Font Group, and Underline. That then is going to give us our earnings before taxes. So we'll then have our earnings before taxes, which are going to be equal to the 70,000 minus the interest. That gives us the 52,000. Then we will calculate the taxes, which are at the 15%. So we're going to say this will be equal to that 52,000 times, scrolling on down then to that 15%. That's going to give us our 7,800 that we can now calculate the earnings after taxes, otherwise known as net income. Bottom line number of the income statement, the 52,000 minus the 7,800, that's going to give us the 44,200. So let's go up to the Home tab, Font Group, put an underline here. So now that we have the earnings, we want to break out the earnings to a per share basis, and then we will think about the market price using the PE ratio. Now, remember what we're doing on the earnings per share is we're taking the number of stocks that we have, the 36,000 stocks. We've broken the company out into the stocks, and we're trying to break out those earnings to the stocks. Now, when we think about 36,000 stocks, we don't mean that we have 36,000 people per se, because one person could own multiple stocks here, but we're breaking that the company down into unit chunks so that we can then think about it in terms of a chunk type of format. So per share. So we're going to take the number of units then, the number of shares, and that's going to be the 36,000. And so then if we calculate the earnings per share, so the earnings per share are going to be equal then to the 44,200 divided by the 36,000. And that's going to give us 1. If we go up to the Home tab, Numbers Group, add some decimals, we could keep going. I'm going to stop at 2, so it's about 1.23. Then we have the multiplier, which is going to be the PE ratio. So we got the price to earnings ratio, or the PE ratio. And this is basically going to represent what the market price is, because remember, the market price is based on things outside of the company. But we can represent the market price based on something that's internal, and you would think the market price would be in some way related to the earnings per share. So we got the earnings per share at the 1.23. We're going to say that the PE ratio then is 17, which means that if the earnings per share were the 1.23, then this will be equal to the 17 times the 1.23. and that'll be 21 about. Let's go to the home tab, numbers, add some decimals. We could keep on going. I'm going to stop at 2 to give us the $20.87. That's going to be the market price. Market price. Let's put an underline under the 17, home tab, font group, and underline. So once again, you can see kind of the earnings per share, and we can represent the market price as it relates to the earnings per share, because you would think they would be, you know, somewhat tied together. So it's useful for us to think about, all right, here's the earnings per share, then a multiple of the earnings per share, which is the PE ratio, to give us the market price. Obviously, to find the PE ratio, if you had the market price, then you would take the market price divided by the earnings per share to get to the 17. So if you're given then the market price and the earnings per share, you can divide those two to get to the PE ratio of the 17.